Hello again. Welcome back for our day 2 of FinTech Sandbox's 9th demo day. I'm Kelly Fryer, Executive Director of FinTech Sandbox. If you joined us yesterday, we're excited that you came back to see more demos again today. This year, FinTech Sandbox is featuring 18 powerhouse startups over 3 days, twice as many startups as we've ever showcased before. In case you weren't able to join us yesterday, FinTech Sandbox is a nonprofit that provides a leg up for FinTech entrepreneurs around the world by providing them with free access to critical data and resources in order to build their early stage products, all through our Data Access Residency. We're proud to say that since 2014, nearly 300 startups have been a part of our program, and we've built a truly global collaborative FinTech community. Demo Day is our opportunity for FinTech Sandbox to bring this community together and feature a few of the incredible startups that have come through our program recently. FinTech Sandbox is fortunate to sit at the earliest stages of FinTech innovation and see products and emerging technologies just as they're being built and getting off their ground, really giving us and our partners a front row seat to the future of the industry. So we're excited to use this event to showcase those innovations and the products built and grown with access to data from FinTech Sandbox's amazing 40 data partners. They provide data and infrastructure for free to FinTech startups in our program, as you'll see here today. In addition to data access through FinTech Sandbox's program, our companies go on to grow their businesses and launch their products, with over 90% of companies securing new partners and customers after FinTech Sandbox, and 85% hiring additional team members. By not focusing on those data costs, entrepreneurs are able to focus on scale and growth for their companies. Since we don't take any fees or equity from our startups, FinTech Sandbox wouldn't be able to support as many entrepreneurs as we do without our generous sponsors. As a nonprofit, they support our mission and founders in FinTech innovation. If you'd like to partner with us and see the earliest stages of FinTech innovation, please reach out to our team. As a couple quick kind of housekeeping logistics reminders, in case you weren't here with us yesterday, feel free to say hi and introduce yourself in our chat on the right-hand side of your screen. And you can see profiles of each startup in the tab up above. We have 6 demos again for you today. Each company will present for 6 minutes, including showcasing how their product actually works. While they're presenting, someone from each company will be on hand to answer typed Q&A too. So you can feel free to add in questions to the Q&A tab on the right-hand side of your screen. Just be sure to include which company the question's for so that we direct it to the right team. There's also a poll tab that we'll use to track interest in each company. So if you'd like to follow up with or connect afterwards with a team, the poll will pop up, and just be sure to submit the poll for each company you're interested in. And then in between the demos, you'll also get to hear insights from FinTech, financial services, and innovation leaders on trends going on within the industry. Today, that includes senior leaders from Commonwealth and the incredible Mike Fanning from MassMutual. Now, today's demos are all about consumers. Between rising food prices, housing crisis, and just overall economic uncertainty, personal financial security has become a global imperative. These 6 entrepreneurs are launching products that increase wealth and savings, rebuild credit and debt, and refine financial education and protection, all by focusing on real-world personal finance challenges and offering solutions when their customers need it the most. And with that, let's get on to the demos.
Thank you for taking a few minutes to learn about Astor. I'm Lindsay Dorf, the founder and CEO. To kick us off, I ask that you think about your investment portfolios. Do you know the return of your portfolio over the past year? Do you know how that return compares to the market? And do you know how that return compares to people with similar financial goals to you? We interviewed hundreds of millennial and Gen Zers, and the answer was overwhelmingly no to all 3 questions. Last year was a roller coaster for new investors. It used to be time intensive to get into the market, but now you download an app, you click a few buttons, and you're trading. This has led to millions of new investors who are trading more frequently than any past generation. And they're choosing to invest in what's exciting rather than what will create long-term financial gains. With the downturn in the market last year, these new investors have realized they need to change their relationship with investing, but they don't know where to start. Our mission with Astor is to empower Millennial and Gen Zers to make healthy investment decisions. We believe that these new investors need a tool that allows them to deeply understand their portfolio and learn about investment strategies that fit their financial goals. This is where Astor comes in. You can think of Astor as the brain of your investing applications. It's not where you trade, but where you'd go before and where you'd go after. So here is my Astor. Last year, we raised a small pre-seed, built a team, and with under $100,000 in engineering costs, have launched our alpha product in March of this year. With our platform, a user can manage their portfolio through finally seeing everything in one place across brokerage and asset class. Through an easy onboarding process, I linked my brokerages to Astor, and they are now sharing my holdings to Astor each day. Up top, I see my entire portfolio value. Right now, it's blurred for easy sharing and demoing. And down below, you can see a top-down view of my portfolio aggregated by asset class and a bottoms-up view aggregated by asset. With Astor, a user also has the ability to gain exposure to different investment styles through benchmarking their portfolio to the market, their peers, and groups they're a part of. Remember those 3 questions we asked you in the beginning? My year-to-date return is negative 23%. I am severely underperforming the market, which is around 6%, and I am also severely underperforming my friends and the HBS class of 2023, who both have similar financial goals to me. Unlike other portfolio management platforms today, Astor gives you an instant aha moment the day you link your accounts by backdating performance. If I want to learn more about Sophia's investment style, I can click on her portfolio, and since she's decided to share her information, I can see her returns, how she's allocated by both asset class and individual asset level. If I want to compare myself to a group of friends at HBS, I can click into that group and learn how people with similar financial goals to me are investing. Astor helps its users create communities where they can grow their investment knowledge. These generation of investors learn through comparison and through conversation. They like to do things themselves with the help of their network. The right portfolio management tool for them required a multiplayer experience. Unlike other portfolio management tools today, Astor weaves in that multiplayer experience. It doesn't just show you what you're holding, but it gives you relative data to determine success and if your strategy is right for you. And unlike apps designed for community-based investing, Astor only shows you real portfolios and does not promote active trading. We believe this is why the platforms you see on the right haven't truly scaled, because they overwhelm a large subset of the population and trigger actions that are not necessarily beneficial for the investor. We believe that the market is big for this and will only get bigger as we continue to not use financial advisors. In order to scale, go-to-market will be essential. As students today, a unique moat we have is access to the business school and undergraduate community. We plan to start with HBS and then expand into the rest of the MBA ecosystem. We also plan to kick off competitions across undergraduate investment clubs. In the next stage, we will expand to other clubs and institutions as Astor is more powerful if your network is using the platform. And during these first 2 phases, we will grow waitlists and begin to scale with a marketing campaign in September. We will initially launch Astor as free, but by the end of the year, we want to implement one or many of these revenue streams. The first is a freemium subscription where we plan to use this subscription to incentivize people to share their portfolios. The second is a customer acquisition strategy for ETF providers. We predict that users will learn the power of passive investing on our platform, which makes Astor the perfect surface for learning about ETFs and sending ETF providers new clients. And the last option is ad hoc services. One piece of feedback we got from prototype testing is that since we have a user's entire portfolio, at the end of the year, they'd like to know what to sell to minimize tax gains. This is one example of something we could charge for. We hope you enjoyed learning about Astor and our mission to empower this new generation of investors. We have a few asks for you today. 1, after we raise our seed round, we plan to partner directly with brokerages for a more seamless onboarding process and to gain more investment data. If you know anyone working on partnerships at a brokerage, please send their names our way. 2, we plan to also partner with ETF and fund providers to market their products on Astor. We welcome any connections here as well. We believe it's not only the right time, but a necessary time to redefine portfolio management software for the retail investor. Thank you for your time.
Hi, I'm Mike Fanning, head of MassMutual's U.S. insurance and wealth management business. I hope everybody's enjoying Demo Day. This is the ninth Demo Day that the FinTech Sandbox has put on, and I know there's been a number of great pitches over the last day or so, and will be for the next day. So again, it's also great to see such a wide range of diversity in kind of global representation of the startups. I think we've got 18 that are featured over the course of three days in the Data Access Residency program. So I don't know about you, but every time I attend one of these events, I always pick up some little tidbit like, hey, I hadn't thought about that. So it's always energizing for me to kind of sit through, listen, and hear the problems that entrepreneurs are trying to solve. So I think as everybody knows, one of the themes of the event this year is consumer and personal finance. And with everything happening, I'm going to say around the globe with the banking crisis, I would say the failure of a couple of fairly large and prominent banks. I don't think there's any better time for people to be thinking about personal finance. And I can't remember a time in my 30+ year career that we've actually seen people standing in line outside of bank branches going back to probably the 90s with the savings and loan crisis. So I think clearly this idea of financial security and in personal finance, and that cascades everything from who should I have a banking relationship with and what should that look like to to a whole host of other things like financial literacy and making sure that that we're providing the access to the tools and the technology and products and services that all Americans need, quite honestly. And I think the financial services sector has served affluent customers incredibly well, and they have plenty of access. But there's hundreds of millions of Americans that don't have the access to the I would say the consumer and personal finance, either again tools, technologies, and products that they need to hopefully build a secure financial future. So I know that's a big one this week. I think the second, big theme around financial transactions and management, I think the advancements just keep coming around payments and a little bit back to, banking, who can kind of control the payments rails for forever. And again, I think the advancements that are being made in real-time payments and again, open banking and things like biometric authentication to again take friction out of the need to do that, and certainly technologies like blockchain. So, I think the pandemic has certainly accelerated that. I think we've been hearing for the last 2 or 3 years that kind of the digital adoption in every form or fashion has probably been accelerated by a decade of where people thought it might be. But again, I think consumers today, as has been the trend for a while, they want to do things on their terms, and that may be on their phone, it might be on their tablet, it might be on their computer, it might be on the phone. But again, I think the advances that are being made in terms of how people are doing everything from shopping for groceries, and who would imagine you could do that on your phone and have it delivered right to your doorstep, to buying life insurance, and now kind of the brave new world of the metaverse and buying real estate and making investments and coins and things like that. So just I would say incredible advancements there. And finally, I don't think you can pick up a newspaper, watch anything on TV without somebody talking about artificial intelligence, and clearly the advances that are being made there, and maybe more importantly, how that can assist, I would say, everyone in every walk of life. So no matter where you are, who you are, and what you do, you're going to be touched by, I think, some of the advances in AI. And clearly, I think that extends into things like consumer and personal finance. So, I think how do we provide much more personalized, and I'm going to say customized advice for the masses, which has been incredibly hard to do kind of in a face-to-face world. So things like AI and the chat technology, and using algorithms to kind of analyze a whole bunch of data. And that could be everything from fraud, detection to just, again, helping people navigate their personal financial lives. So again, a ton of activity, and I think really a brave new world for how these types of technologies can impact consumers and even big companies like ours. So Again, a lot has happened over the last, week to 10 days. And but when I look back on kind of other events like this, and you go back no further than the 2008, 2009, and I think it really did blossom a whole new set of innovation, entrepreneurship, and really people looking to be sure that they're not ever going to be put in a situation that they're not controlling what they do. And I think, this is maybe the golden age for entrepreneurs with great ideas and innovations to really get out there and help serve more people that need the products and services that you're all working on providing. So with that, excited about where we are. Great to be with you today, and I hope you enjoy the rest of the meeting. Thanks.
Hello, everyone. Did you know that over $700 billion is the amount immigrants transfer annually to support families, many of whom made it possible for us to be here? And can you imagine losing over $25 billion of that amount to fees alone? This is the reality many immigrants like myself. We want to stay connected to our families and help better the unfortunate economic positions. But when sending money over, we are typically faced with painful realities for means of transfer. I'm Bobola Obediyi. I'm the founder and CEO of CrossKudi, an immigrant-focused financial technology company creating new products and services to meet the unique financial needs of over 47 million immigrants in the US. Our go-to-market strategy is providing affordable and faster remittances for our target customers. Once we have these customers, we will start offering them value-added services as we grow. Today, we are going to show you onboarding and the money transfer, which is the key foundation. And after passing KYC, a customer can start a money transfer request by coming to the dashboard and hit send money. Then you have an option to select your recipient type. If you are sending to an individual or making a business payment, but for this demo, we will select individual. You can select from the list of beneficiaries you have already saved or add a new recipient. So let's select one of the recipients that has already been saved. Here is the amount screen where you will select your payment method. Enter the amount you want to send or the exact amount you want your recipient to receive. Select the delivery method. In this case, it's direct to a bank account, and you can make it a recurring transaction or turn it off as is. Then select the reason for the transfer. There is no transfer fee, as you can see. So the amount entered in the send field is the total you are paying. Then continue to preview the transfer. You will review to make sure all information is correct, accept the terms and conditions, then hit send transfer. Once transfer is submitted, it goes through our checks and approval. Transactions goes through the blockchain protocol, and currency conversion is where CrossKudi comes in, and that is where we make our revenue. Though we use blockchain technology to process the movements and effects of the funds via our exchange partner, both senders and recipients are not exposed to crypto or its price movement. So a US sender send US dollars and their recipient receive local currency directly in minutes. You can see the status of the transfer here. Share the confirmation to recipients and share a referral link within your network to earn credits towards your next transactions. We are currently able to pay out directly to bank accounts, but with the right partnerships, we'll plan to enable direct to mobile wallets, push to card, and allow cash pickups for the unbanked and people in rural areas. We focus on generating revenue from the spread in the exchange rates. So when the customer sends $100, we take up to $4 and the recipient will receive an equivalent of $96 in local currency. Initially, we are targeting the US to Nigeria and India markets before expanding into other top countries for remittances. Ultimately, we are looking to serve all 47 million immigrants in the US. From 2021 to 2022, we are focused on understanding our customers' unique needs and the regulatory environment, which led us to hire a top consulting firm to develop our compliance policies and procedures, register with FinCEN, and obtain our first MTL license from the state of Georgia. We have also been fortunate to gain support from many accelerators, including the FinTech Sandbox, for this opportunity. As you can see, there is so much to do, and we know we can't do it all alone. So for a sponsor bank, this is an opportunity to gain more customers. And if you are an investor, this is an opportunity for you to join the next big thing. Let's win together. So to discuss further, please reach out via my email, bobolaodebi@crosskudi.com, and it's also on the screen. Thank you.
We started Act 2 when an elderly friend became the victim of broker fraud. He shared with me how he instructed his broker to invest in index mutual funds. Instead, the broker bought money-losing stocks, a $150,000 loss leading to a lawsuit. This story and our personal experience dealing with family motivated us to build an app that would make a difference to seniors and their families. People want to think retirement's a downhill walk in a meadow of flowers collecting a pension check. The reality is it's walking a trail, frequently in the fog, full of unseen challenges. We all have our story of elder fraud, but elder fraud is emblematic of a larger issue. Decisions and actions in retirement become more challenging as you age. The issue is not just fraud, but includes big decisions like deciding when to take Social Security, which Medicare plan to enroll in, or how do you accumulate 40 years of savings, or just remembering to pay the bills. The decisions become both more important and challenging given increasing longevity. Families are separated by distance and frequently cannot help. In retirement, one financial misstep will create a financial hole you'll never be able to climb out of. You're retired and not wanting or able to go back to work. Act 2's radar helps you navigate this path. The Act 2 solution starts with consolidated data and using that data to improve behavior, combat inertia, and provide holistic monitoring and advice. Everyone has dozens of apps for finance and health on their phones. Within those apps, we use a few features daily, most intermittently. Act 2 consolidates data from all the apps and monitors this data holistically, sending alerts and nudges in near real time. We interviewed dozens of caregivers and wealth managers, posted on the AARP Caregiver Facebook page. The overwhelming response is Act 2 will help solve the issue. Our holistic approach separates the signal from the noise. The monthly alert you get from the Bank of America for moving money from your Vanguard retirement account to checking becomes noise after a few months. Real value is knowing that it should have occurred but didn't. Here's some sample alerts and how we add value by consolidated data, informing you of pending late fees on a bill or an unusual wire, or how your portfolio risk changed when your advisor executed some trades. Not only does this alert keep the senior informed, it increases engagement for advisors. And we add value by suggesting ways to reduce fees within your investment portfolio. A unique feature of Act 2 is the privacy dial. We encourage the senior to share the alerts with family and advisors. The senior controls how much information is shared, and they can change that information at any time. As the senior ages and needs more help, they can turn up the amount of information being shared. Sharing the alerts does not give the observer the ability to transact in accounts. They can just see the alerts. They're an observer. The sharing feature can also be used by family members to monitor the caregiver in charge of finances. Sadly, half of elder fraud is perpetrated by family members. Adding and changing an observer is simple, and you don't need a power of attorney to do it, making Act 2 that much simpler to use. We plan to distribute Act 2 on a B2B to C model through trusted financial intermediaries like credit unions, community banks, estate attorneys. Our value proposition dovetails with the mission and needs of these firms that we'll be distributing through. Our market size is large. There are 54 million seniors, half of whom have online banking. To define life stage by age, we see the group of 70-year-olds as wanting help managing data, but want their independence. The second set in their 80s have help, and Act 2 will be used to monitor the caregiver and likely set up by the caregiver or the family. The convergence of lower technology costs and the growing size of the senior market make this a great time to launch this product. The large financial services firms provide some alerts, but nothing consistent. No alerts that you can copy family on, and no one monitors what your broker's doing. Advice for seniors is mixed with general advice and not always on targets. Seniors don't usually need an IRA or to set up a 529 for their kids. Maybe a 529 for their grandkids would be more appropriate. Feedback's been great and motivating as we've demoed this prototype to credit unions, estate planning attorneys, caregivers, and community banks. Credit unions and banks will likely offer Act 2 as a white label product inside their firewall so they can have single sign-on. We expect to achieve break even at 30,000 users with 40% margins. We know that integrating with financial institutions presents unique challenges. We model for that. And note that bank and credit union record keeping is dominated by 3 major vendors. Other fintechs are working to make that simpler. We've currently built out a working prototype, interviewed dozens of B2B partners. We've got a beta release scheduled for this summer. Upon the beta release, we'll be looking for seed funding. If you're an investment advisor, credit union, or bank, we'd love to meet with you. With Act 2 success will come better retirement for seniors and less stress for their families. Thank you for your time.
Hello, my name is Gwyneth Borden, and I'm the founder and CEO of Remynt. Remynt empowers consumers to rebuild credit while resolving delinquent debt. We've all seen the headlines. Americans have reached historic levels of credit card debt, and many are falling behind. Delinquencies are increasing and credit scores are decreasing among the young, low income, and people of color, cutting them off from access to credit, assets, and job opportunities. Unfortunately, many of these people are going to fall into something where they have severe delinquency called charged off debt. This is when your credit card account is closed and been sold to a third-party debt collector who's now calling you incessantly to collect on it. You have to make a choice. Do I pay this debt knowing it's not going to help my credit score, or do I take my risk with litigation? Unfortunately, paying charge-off debt does not help credit scores because it's not on an open credit account, which is how credit scores are calculated. That's why many people don't actually pay what they owe. But for people who want to rebuild their score, it's important to have it paid in full show on their credit report. I know this from my personal experience of rebuilding credit while resolving delinquent debt, because even though I fully repaid my debt, I was not experiencing a bump in my credit score. To solve that, we buy portfolios of charged off consumer credit card debt, and we offer those consumers the opportunity to earn new credit, a savings account, and reward for a payment. What's novel is we essentially open a balance transfer credit card for these folks, which enables us to report their payments on an active credit account, which helps rebuild their score more quickly. We also provide a savings account with 1% cashback rewards, which will also be the savings account they'll have when they actually have credit, where they can accrue further cashback rewards and rounded up purchases. When people fully repay their debt, they have access to credit at 50% of the balance they paid, but not until they fully repaid. When they go online, the first thing that they see is the screen to the right, where I tell my story about why we're different and how we're on a path to a journey to really help them be in a better financial situation. For them, they log on because we buy our debt. We have all of our information about our consumers. We provide with them an account number that they log into with the last four of their social. When they log in, they can validate their debt, where they can see all the information about their creditor and choose how they want to take action. They can choose a payment plan, which can be weekly, bi-weekly, or monthly. They can pay once, they can settle their debt, or they can pay in installments. If they're having a hard time, they can indicate that too, and indicate a hardship, and then we will target them with content that will help them, whether it would be an expert on our Discord or our community forum to help them rewrite their LinkedIn profile, or just content on how they can get out of other debts. We also make it really easy to pay. We meet consumers where they are. Most people don't know their bank account number, and there was a point of friction we found in our research in making people pay with bank accounts. So we're taking Cash App, Venmo, PayPal, any way where people have money is how we will accept their payment. We also track their score, both because we're reporting on it and also to help people see how they're progressing as they're paying off their debt and moving into their better journey. They can also choose to attach their finances and join our community, where they can experience regular programming. If they choose to manage their finances with us, they can attach all of their banking accounts and they can track all of their spending. And this helps them be better prepared in a way to be good on their financial health. They can also set alerts. They can learn about how they're spending their funding. They can actually create budgeting tools, which we're really excited about because that's really what's lacking for a lot of people in this category. When we did our surveys and actual conversation with over 200 people with charged off debt, being able to go online, resolve their debt without having to speak to anyone was a major point of what people wanted to see in order to resolve their debt. They also really wanted to rebuild their credit score, and they really wanted better options for how they pay and what frequency they pay. There's no one in the ecosystem focused on credit recovery. All of these products and solutions are either focused on debt consolidation, which our consumers wouldn't be eligible for because they have the delinquency, or new credit, or actually debt relief, which further tanks their score. This is a $20 billion annual problem and is likely to be greater this year. We are able to leverage data because we natively get data about our consumers. And then on top of that, we are able to collect a lot more data about them so that we can target them through social media, through text messages, through emails, so that we can nurture them online to resolve their debt. Debt is very cheap, and it's getting more cheaper because of the delinquencies. So we can buy people's debt, $1,000 debt for $25. And if they pay 75 to 100% of their debt, then our profit margins are in the thousands of percent. But then we create lifetime customer value because we meet them when they're young and distressed, and then we grow with them over time, providing them credit. So once they resolve their debt, they can grow with us over time. We are on a path to help people on a journey to a better financial future. I built this product because of my experience, and I want others to have the opportunity to learn along the way, to get the financial literacy, the content that they need, the management tools that they need, and the supportive community so that they can get on a path of better financial future. There's a lot of shame among those who have this sort of debt, and they don't feel like talking to their family members and others because they fear they'll be judged. We're creating a safe space where people can get all of the resources that they need so they can make better choices for their better financial future. I hope that you'll help me get millions of Americans reminted to a better financial future. Thank you.
Hello, my name is Natalie Blain, and I am a Senior Innovation Manager at Commonwealth, a national organization focused on making the financial system more equitable for people living in financial insecurity through innovation and partnerships. Our big vision is to make wealth possible for all. Thanks to the FinTech Sandbox for the opportunity to be a part of this important event. At Commonwealth, we are tackling financial insecurity at a systemic level and are developing innovative, scalable responses and actionable insights that companies across the financial sector can apply. With more than 2 decades of leadership in this space and extensive consumer research, we've developed a deep understanding of the needs of people living on low and moderate incomes and how companies can meet those needs. We've used that understanding to develop tools and opportunities in partnership with the private sector partners like financial institutions, fintechs, employers, and workplace benefit providers. We share our actionable insights broadly to change how institutions approach financial inclusion, inform how they design inclusive financial products, and influence policy and federal regulation, resulting in greater innovation across the entire sector. Our partnerships with both early-stage fintechs and large-scale private sectors generate data on impact. So a concrete example of this is our work as part of BlackRock's Emergency Savings Initiative. Over the course of 4 years, we worked with more than 30 organizations, including ADP, UPS, Voya, Truist, Best Buy, and many others to design, deploy, and evaluate emergency savings interventions. These interventions have reached over 10 million people and generated more than $2 billion in savings. Our Actionable Insights for Inclusive Product Design Toolkit was developed to ensure that financial products and services, whether that means workplace benefits, traditional banking products, or innovative solutions offered by fintechs, are designed to provide positive experiences for underserved customers and increase engagement through human-centered, inclusive design. We know that financial inclusion is a priority for many of the companies demoing at this event, and many of you in the audience. Our approach to the research and design of inclusive financial products aims to center the needs, wants, and aspirations of people living on low to moderate incomes, particularly Black, Latinx, and women-led households that disproportionately experience financial insecurity due to longstanding systemic racism and gender discrimination. So I'll close with one final collaboration opportunity on the theme of inclusive finance and focus on AI-powered chatbots. We're continuing our partnership with JPMorgan Chase to address the challenges and opportunities that emerging technologies present for advancing the financial lives of US workers earning low and moderate incomes. We are currently recruiting fintechs and financial institutions utilizing AI-powered chatbots to conduct field tests to evaluate their impact on financially vulnerable people. Please reach out if you'd like to be on the leading edge of ensuring these emerging technologies contribute to greater financial opportunity for all. Thanks again and enjoy the rest of the event.
Hello, my name is Tony Cerce. I'm the co-founder and CEO of ProsperOn, and we are on a mission to eliminate financial stress and anxiety for 52 million young adults in the United States. 68% of young adults 18 to 34 years old suffer from financial stress and anxiety. On the individual level, this is a major problem, as Americans lost over $400 billion in 2020 due to poor financial literacy, and this problem has had tremendous downstream effects on businesses and the economy as well. In 2021 alone, employers across the US and Canada lost $4.7 billion each week due to lost productivity. And wealth management has been hit the hardest, as only 1 in 10 new financial advisors survive their first 3 years because they cannot find clients. At ProsperOn, we believe the best solution is an ecosystem of resources that support young adults on their financial journey from graduation to retirement. And this all starts with education and what we call an exhibition game for life. Our education product is delivered through colleges and universities and takes students on a simulated journey through life, allowing them to test drive financial products in a no-stakes environment while building a technical and intellectual foundation for them to use when making real decisions. Here, I can explore financial decisions and learn day-to-day money management while crafting an actionable plan to adopt in real life. So let's see what this looks like. On the left, you see I've gotten my first job and I moved out of the house. Throughout the experience, this timeline will tell my story through every decision I make. In the middle here, you see I'm 23 years old living in Boston. I can choose to continue with budgeting, or I can engage with one of the recommended anytime decisions. I decide I want to get a credit card, and I'm first greeted with a quick video explaining credit cards along with written information about key points. Next, I'm presented with a variety of credit cards based on what's best for me. And if I take a closer look to these cards, I can see the benefits of the card on the left and the financial impact of choosing that card on the right. You might notice these are real cards, and this is what makes us truly different. We're able to offer our platform for free to students and organizations by leveraging what we call product placement and context, which is the highest level of content marketing. We not only educate students on what these products are, but we also allow them to test drive these products over simulated time on behalf of these companies. So let's say I choose this card and I continue with the game. I'm now confronted with a scenario. Just like in real life, we can incorporate the chaos of everyday life into the simulation. Just like I can't choose when my car breaks down, I now have to face the facts that my TV just broke. Now that I have a job and I'm living on my own, it makes sense for me to put together a budget. Here I learn about budgeting as a concept, and then I fill out a spending profile, which covers what kind of spender I am, what subscriptions I pay for, and what my monthly costs look like. Once I finish the profile, I can build my own custom budget. And I can't have a budget without transactions, which are all fed through the information I provided in the spending profile. Now, later parts of the simulation, I will tackle different financial problems such as investing or insurance, and my budget will be one of the key tools I use to make these decisions. The best part of this is when students finish the simulation, they step into life with confidence, a strong educational foundation, and money management tool they're already familiar with. By connecting their real accounts through Plaid, students can use the same platform they've been using to manage their money in real life to grow their wealth into their adult life. For students, we offer an immersive experience where they can pursue their own definition of financial success. They'll experience the compounding effects of financial decisions, and they'll learn to notice pitfalls in the present while keeping an eye on the future. After completing the simulation, ProsperOn continues to deliver value by helping young adults manage their money in real life through real-time budgeting tool following our education product. For brands and paid partners, we offer a new and effective channel for customer acquisition. Through product placement and context, we give brands the ability to showcase their products to young adults in a way where the benefits are clearly explained. We also provide what we call the dealership effect, where students can test drive real products in the context of their situation. And this service extends across all corners of life, including banking, credit, insurance, investments, taxes, vacation. The combination of product placement and having these partners in a product directory allows us to simultaneously deliver value to companies and students. Over the past year, we brought this idea to life through bootstrapping and pitch competition wins that we've used to fuel our MVP build. We then launched a successful pilot at Quinnipiac University last fall where we recognized revenue for the first time. Currently, we're in the middle of our second pilot program with several universities across the Northeast. Post-pilot, we'll be exploring contracts with these institutions for a full product launch in the fall. And in the next 18 to 24 months, we hope to scale to 70,000 education users, 9,000 budgeting users, 71 partners, and $500,000 in revenue. This brings us to customer acquisition. How do we plan to meet these goals? Well, in the short term, our pilot allows us to establish beachheads into higher education. We then plan to work with administrators and faculty to initiate school-wide adoption and explore different deployment options. Our simulation can be a standalone resource, part of an existing course, or even the course itself. This creates a steady flow of users for the simulation and a post-graduation pipeline for real-time budgeting. Our ask of you today is simple. If you're interested in building a world where everyone has access to tools and resources they need to pursue their definition of financial success, well, let's get in touch. Thank you.
Hi, we are Finurja. We are the virtual Fitbit for financial fitness, targeting 40 million simple needs affluents in India. Simple needs affluents are doubling in the country every 5 to 8 years, and together they represent over $1.2 trillion of potential AUM. They're typically 34 and above and have between $50,000 and $500 million of investable assets. They're preservation-minded, lean back, and sometimes fearful of adopting new asset classes. They're largely underserved by the existing players in the market who are focused on the higher end of the risk and lean back spectrum. Through our habit-forming app, we are creating a trustful journey for simple needs affluents and for Finurja to get a seat at the decision table on all things personal finance. A set of our features focus on creating awareness and discipline in tracking and monitoring a 360-degree view of their finances. Another set of features, through gamification, vernacular content, and community, encourages experimentation and education. A third set of features works the motivation to take informed action to get to the next level of financial fitness. Now let's take a look at some of these features. The user can easily onboard and with a few clicks, link all of their financial institutions, banks, brokerages, retirement accounts, etc., into a single user experience. Users can view an aggregate of all of their assets, as well as study institution by institution at the aggregate or transaction level. India has low FDIC insurance, which means that affluents have 3 to 5 bank accounts to divide the risk, which in turn creates the pain point of juggling multiple apps. All this is enabled digitally by the newly minted open banking regulatory initiative in India called Account Aggregator. The graph on the bottom right here shows the hockey stick growth of the Account Aggregator framework, where more than 1.1 billion bank accounts are now available to be linked by third-party value-added service providers like us. We are one of the first few personal finance management startups building on the Account Aggregator framework in India. Once the user has linked their accounts to build a 360-degree view, we give value back to the user by highlighting atypical and anomalous transactions to prevent fraud. This is a known pain point in the market and further helps us establish trust and reduce anxiety with this demographic. We also show the user trends of their savings and spending habits to increase money mindfulness. This in turn gives us digital triggers to have a conversation around savings and investing. One of the more popular investment asset classes with this demographics are fixed deposits and recurring deposits. These are similar to CDs here in the US. Once the user links their account, we specifically track these investments and offer the value of digital reminders via their calendars to save them from the bane of auto-renew, which typically works in favor of the banks rather than the investor. We also provide them with coaching and recommendation on what their FD portfolio should look like to increase the interest earned by 1 to 2%. This translates to a decent amount of money for some of these investors, as they have a lot of their money parked in fixed deposits. To do this optimization, we consider their safety and liquidity preferences and apply asset allocation techniques from the mutual fund world. We also offer corporate FDs, which offer 2 to 3% higher interest rate if the user is willing to take a little bit more risk with a portion of their FD allocation. We also help the user link their retirement accounts of NPS, EPF, and PPF. These are equivalent of IRAs in the US. By providing a single user experience and app to track these, we nudge the user in a timely manner to review their investments in a holistic fashion, to rebalance or add and modify investments. A fitness parallel to this can be how an Apple Watch or a Fitbit might nudge you to get up and walk if you have been sitting for a long time. Once the user gets engaged in tracking, preserving, and optimizing their investments, we encourage them to capture their life goals using our chat-based RoboCoach to understand and map their life goals to their existing assets. With an understanding of where they will fall short in meeting their life goals, we nudge them towards curated financial services that we in turn monetize, such as mutual fund baskets, optimized home and education lending options, corporate FDs, and insurance products. Our go-to-market leverages 2 levels of community: an inner circle of trust, which is a close user group of the members' confidants. These could be trusted chartered accountant, IFA if they have one, a family member whose judgment they trust, etc., so that they can seek counsel before making big decisions or trying out something new. The outer circle represents our meta community that has grown to over 10,000 members and is growing at a healthy clip of 30% month on month. So what's next for us? We have integrated with a couple of account aggregators in India and are in the process of integrating with some feeds from the FinTech Data Residency. We are close to our soft launch of a few hundred users, which will be followed by a beta release to our 10,000 plus community and waitlist members. As we gain traction and early PMF, we plan on embarking on a funding round later this year. Thank you.
Hats off to the 6 powerhouse startups that we saw today. As you saw, the innovative products they're building are solving financial challenges faced by everyday people and working to improve consumer financial health. Thank you again to Mike Fanning from MassMutual and Natalie Blain from Commonwealth for discussing the impactful trends their companies are seeing for consumer finance. At FinTech Sandbox, we know launching a FinTech startup is not easy. If you're an entrepreneur like the ones you saw here today and need help accessing data for your product or just growing to the next stage, be sure to apply for FinTech Sandbox's Data Access Residency. We're so excited to see you back here again tomorrow for our final 6 demos. Tomorrow is all about SMBs and financial infrastructure. Come right back here to this exact same event link tomorrow at 11 a.m. Eastern. As a reminder, FinTech Sandbox doesn't take any equity or fees from our startups, and the only way we're able to do that is through the generous support of our sponsors. So thank you again for being a part of our mission. And of course, to our incredible data partners who provide free access to their products for our entrepreneurs and help support FinTech innovation. See you all again tomorrow at 11 a.m. Eastern. Thanks again for joining us today.